Welcome to FinScale, a podcast created by Solen Niederkorn, shedding light on innovation in finance, banking, and insurance.
Data, the lifeblood of private equity warfare. Charlie Tafoya, CEO and co-founder of Chronograph.
There, I would say, the challenge was one more of data availability, right? Do you have a process in place to actually collect data in an efficient way, again, structure it and then report out to your LPs and, make use of otherwise for portfolio monitoring, again, in a way that maximizes your own understanding of your portfolio and opportunities, again, for value creation. So I draw that distinction between LPs and GPs to say that they're different sides of the coin. GPs, again, need to be more focused on basically the process of gathering and creating the data that they then report out. LPs, conversely, are more focused on receiving that information and consuming it in an efficient way.
There is still a long way to go to transform the PE industry, which still relies on Excel for many tasks. These manual processes are a golden opportunity for anyone looking to innovate in the industry and help the constellation of players in this ecosystem improve their efficiency and better serve their clients. I reached out to Chronograph because I am well aware of the work they've been doing for years to streamline data management, analytics, and reporting. This US-based solution offers a portfolio monitoring software that makes life easier for private equity investors across the globe. Charlie shares with us their story and how the initially LP-focused offering naturally expanded to GPs. We discuss the solution and the specific problems it addresses, one of the three essential pillars of the PE stack. Enjoy the show! Hello, everyone. Hi, Charlie.
Good morning. How are you doing?
Yeah, I'm fine. I'm thrilled to have you as guest on my podcast. And the listeners know, I'm a huge fan of private assets. So I'm very happy that we're again diving into the topic and to talk about the behind the scenes of Chronograph. Before we dive into the topic, can I ask you to introduce yourself to the listeners and explain a little bit your professional experience and your path to Chronograph?
Certainly. Well, thank you again for having me. But yeah, Charlie Tafoya, co-founder and CEO of Chronograph. Started my career as an investment banker, actually. So something that may be familiar to you. Did my few years as an analyst, and then subsequent to that, went into private equity with Pantheon, which is a London-based fund of funds. And at Pantheon, I did secondaries private equity. There, really got to see across the market, and at a stage when the secondaries market was really just beginning. So I think the first year I was at Pantheon, the total GMV of the market was something like 10 to 12 billion. Today, that's over 100 billion. So it's just grown dramatically. But to the point, would say that it was a very interesting time coming out of the global financial crisis. And, you saw a lot of fund restructurings and capitalizations, and just raw secondary portfolio deals. And in short, it was a very interesting vantage on the business of private equity as a whole. As part of that experience, would say that a few things stood out. One is that, really there was more data than I ever expected there to be. That data had tremendous value, certainly in what we were doing, but just more broadly across the market. But felt very strongly that, unfortunately, there weren't very great technology tools to take advantage of that information. So that was really the context that provided the genesis for Chronograph itself.
Perfect. And when did you found your company?
In 2016, I actually left my job on a Friday, got married on a Saturday, and started hacking away on Monday. So it was a heck of a turnaround. And my father-in-law didn't even know that I had left my job on the altar, quite literally. So it was a lot of life changes all at once.
Good. Okay, so the listeners, there are amongst my listeners LPs and GPs, and some may have encountered challenges in their daily management, of course. But I don't have only LPs and GPs of private equity funds on the podcast, so I'm sure it's interesting for the others to shed light on the number of bottlenecks, particularly in terms of data management that they are facing on the day-to-day. That can have huge impact on investor relations, but also regulatory compliance. So how would you say data fragmentation, as you said, and the management of that data can pose challenges for the LPs and the GPs to maintain that unified overview of investment portfolios, but not only?
Yeah, so I think, the first comment I would make is that private markets are in effect at the state of public markets, or at least where they were in about, call it 1986. which is to say, if you go all the way back to the 80s and think about the average experience of public company reporting, either you had to go down to a repository for filings and actually check out a filing, have literally a paper spreadsheet, do some computations, check the file back in, and then go, try to do your deal. Or if you're at one of the bigger banks, maybe you had this new platform called Bloomberg or just a computer or computers in general. So all that's to say that, certainly we're beyond paper spreadsheets happily in private equity, but you're still dealing fundamentally with a lack of infrastructure, right, around how information is distributed and consumed. You're dealing with the lack of standardization around how that information is reported and again, interpreted. And you're still seeing evolving norms around the sharing of information as a whole. Now, I think that, to be clear, that's totally appropriate, right? I don't think that public and private practices and public and private markets should ultimately converge. I mean, there's certainly some trends that will cause a degree of convergence, but just speaking as, the CEO of a private company and former private equity investor, I do think that there's a lot of value to the way in which private equity broadly operates. Having said that, I think, we are in 2024 now. There is a need for more digitalization as a whole. And as a result, I think we're really seeing a lot of opportunity, obviously, as Chronograph to help move the industry forward. So all that's to say, you're facing these fundamental issues, and really those are the issues that we've tried to tackle and turn in the form of, SaaS applications for both LPs and GPs to, again, collect, structure and ultimately report and consume their information, taking a opinionated view of things like the data model that's required to have something that's flexible enough to address all sub-strategies within private capital, all industries, that folks might invest in, et cetera. And then do that in a way, again, that can really provide a foundation to bring further opportunity to the asset class as a whole. Things like, providing more information that can unlock defined contribution as an asset base, et cetera. There's many things happening in parallel and short that, again, gives me a lot of optimism that we are reaching a good place and balance for the industry as a whole relative to, again, sort of where it began, going back to call it even 2008, when I would say you saw the first normative shift, which we can get into in a bit.
Mm-hmm. And if we focus more particularly on the reporting, there are many different reporting that those LPs and GPs need to produce, particularly for their investors, so on both sides. How did you see this evolving over the years? I see it becoming more and more complex also if we add, in addition to that, all the reporting linked with ESG. So if we could summarize the complexities of producing these reports, could you just give us a flavor of that complexity and explain to us how, in general, those managers are tackling those problems?
Certainly. Well, for a bit of quick history here, I mentioned that in 2008, there was sort of an inflection point. And, that's true in many different forms, obviously, given the global financial crisis. But as it relates to private equity information, I would say that for the first time, LPs were really empowered to drive new levels of disclosure from GPs. Prior to this, really only the very largest funds would provide any level of true transparency at the underlying company level, meaning that the assets themselves and how they're fundamentally performing, their approaches to valuation, et cetera. More the norm was simply to report, your basically partnership financials and GAAP accounts, and folks can know in effect what is the return that they're achieving. But they didn't have a very good sense of exposure and, again, underlying drivers of performance. That really started to change in 2008. And I would say we were sort of in the second epoch, if you will, from that through 2020. And based on, at least on our experience at Chronograph, March 2020 with COVID was really the next true inflection point, in that you had, a lot of folks with consumer exposures that were now suddenly having to revalue their portfolios, in many cases on a daily basis during the initial lockdowns. I mean, there was just such a sense, probably a free fall in that moment. And again, people really needed to understand, what are the implications for our assets and exposures. And in short, those without the benefit of, in effect, structured information really found themselves without a paddle, which is to say, they really were caught in a hard place. So since 2020, I've not heard almost any investor try to argue that, quote, Excel is good enough. I think everybody broadly realizes the opportunity and benefits of having technology in place to assist with, as you noted, many of the evolving demands around data. But to the point, I would say that if you think of it as a soccer match, we're probably still in the first 30 minutes of play. We're probably at the 30-minute mark. So definitely still early, but happily, again, seeing a lot of normative shifts around, in particular LP, expectations with regard to GP data and technology competency. That's true even for first-time managers, right? We're seeing this in DDQs. For emerging managers, we're seeing this again, really across all parts of the fundraising cycle. And now, just given the broader fundraising context for GPs, which is to say, it's been a difficult couple of years. I think GPs have woken up both the operational opportunity to have streamlined operations and in short, a true enterprise, if you will. But then further, it's really become again a precursor to actually going out and trying to fundraise. So happy to comment more on sort of the specifics, which is to say there's high degree of variabilities across different sub strategies, et cetera. But more thematically, would just say that we're reaching a point now where again people are benefiting from technology and realize the benefits of data.
Yeah, so it's just the beginning, I believe. What role would you say advanced analytics play in improving the insight into portfolio performance? And is it something that is currently used by managers or not sufficiently, in your opinion?
Well, so Chronograph provides two different products, and this is in response to your question. One is for LPs, which is more analytics oriented, because for a limited partner, the challenges are ones more of data aggregation, right? How do I take in all this information and structure it in a way that gives it meaning? And then further, how do I then interpret that information in an efficient way? If I am a pension plan, for example, I may not have the human resources, right? The analysts and associates needed to actually process the volume of information that I'm ultimately receiving. And so in short, there are probably questions I can answer with the data I hold, but I just don't have the operational capacity to address that. And so that's a good example of, someone who will again engage Chronograph to help them in effect get at those answers. For general partners, I would say the issue is less analytics, right? There's a lot of certainly very smart people that work in private equity, a lot of great people who can model. There's a lot of, talented technology folks as well now who are involved in all aspects of, the value creation process at private equity firms, inclusive of analytics, but also now, increasingly AI applications. There, I would say, the challenge is one more of data availability, right? Do you have a process in place to actually collect data in an efficient way, again, structure it and then report out to your LPs and, make use of otherwise for portfolio monitoring, again, in a way that maximizes your own understanding of your portfolio and opportunities, again, for value creation. So I draw that distinction between LPs and GPs to say that they're different sides of the coin. GPs, again, need to be more focused on basically the process of gathering and creating the data that they then report out. LPs, conversely, are more focused on receiving that information and consuming it in an efficient way. So hopefully that answers your question, but trying to provide a bit of, again, broader context here.
Okay, interesting. Thank you very much. So now if we focus more particularly on Chronograph, I would be interested that you describe to us the way you launched the business. So now it's been years that you launched it. You already have great investors, and we'll talk a little bit about your investors. So what was the starting point? A blank page, a team? How did you start this business?
Certainly. Well, I already mentioned some of the original context, which was to say sitting there and looking up one day and seeing, a bunch of high cost investment professionals manually typing numbers into Excel, which I'm sure many of your listeners will identify with. And that just struck me as a fundamental disconnect. And so in short, started to do some diligence on, well, how have others solved this problem? What is available? And again, you can ultimately, I suppose, call it nerdy arrogance, but felt that in short, no one was really addressing the problem in the right way. So around that time, I actually was introduced to my co-founder, Michael Bridge. Our wives actually worked together at Bain as consultants, and they've been kind of encouraging us as tech nerds and private equity guys to get together. And, we deferred and demurred a bit, but ultimately did get together in Brooklyn, which we're still headquartered today. We had a coffee, which over the course of the day turned into an evening whiskey. And we just saw a lot of the same fundamental problems from the perspective of both an LP and a GP. So both Bridge and I, as he's known, are developers by background. And in short, we were able to ultimately shake hands and sit down and start coding together. And that's basically what we did. So to tell you the story quickly, we originally sat in a windowless, closet basically above a beer hall and specifically above the kitchen. And I know that because the smell of bratwurst would become quite pungent around 3 p.m. when they started cooking. But we really built the initial LP platform, even as it exists today, in a handful of months, just sitting there together and again really coding. And at that time, we felt confident we had built something that was sufficiently sophisticated to actually bring to market. So we decided to formally incorporate and put it online. And sadly, when we launched it officially, we had fewer visits to the website than there are even immediate members of my family. So not even all my brothers and sisters deemed it important enough to visit. And that was when we realized, okay, scaling a SaaS company takes a heck of a lot more, namely actually going out and selling it. And that was an important early lesson. But from there, I would just say, in short, we put our heads down and really started grinding for, candidly, a number of years to really build up the trust in the market and build up the sales motion and everything else that goes into selling software in this space. I'm going to have to send them this episode because hopefully they'll love the shout out. But our first client was Pacific Life. And I think what's notable is that they were the first client of Investran back in the day, which became the main accounting system actually in the private equity space for many years. So yeah, they're doing something right out there in Newport Beach. But we're very grateful to their early trust. In fact, they gave us some of our really great early feedback that still informs our product to this day. And they've been one of many great partners and clients that we've managed to build over time. Noting that today we actually manage over 20 trillion in gross assets on the platform, some very significant scale, and candidly a bit of a who's who on the LP and GP side around clients and quality clients at that.
I guess you went to bigger and bigger clients, correct? So what was your strategy in the beginning and how it happened in real life?
Well, I think Pacific Life certainly has a decently sized program. I mean, to the point though, they're a very large insurer, right? And so regardless of the size of the program, there was a lot of realities that we certainly encountered, which were to say things like, information security reviews, vendor and contracting processes, stakeholder buy-in. Again, all the things that actually go into the sale of software. And so being able to navigate that really set a high bar from the outset around overall process competency. And so as a result, actually, our second client was APG, the public scheme of the Netherlands, which is the largest public pension plan in Europe. Again, very sophisticated and candidly complicated process to get that sale done. But that really, I would say, set the tone for how we approach the market. So we had the benefit of really starting at the most sophisticated end ultimately. Can go through a number of names in due course here. But in short, yeah, I would say we really benefited from securing many of the very largest LPs as clients, and then have worked since that time to expand across the AUM spectrum. I think what's important to note is that we actually started exclusively as a provider to LPs. That was really where we saw the biggest and most immediate disconnect in available technology. But it was in late 2018, heading into 2019, where we saw the opportunity to naturally extend into the GP space. As previously mentioned, very different problem set, in that, again, it's more workflow and sort of data collection oriented. But we'd already solved for a number of technology complexities around things like, the data model itself, as mentioned, right? You need something that can address basically all forms of investment. The fundamental infrastructure, noting that, again, in the case of an LP, you're probably talking about tens of thousands of underlying companies, hundreds, if not thousands of funds, et cetera. So in short, we had to have highly performant tech. And so for us, it was really an opportunity to take, in effect, the back end, if you will, and build a new front end that was serving a different use case, but again, with the same sort of concept in place, and again, the same infrastructure in place. So that was the approach that we took, and again, had a lot of success out of the gate. One of our first clients on the GP side was actually the SoftBank Vision Fund, which was, it's obviously a huge program and highly voluminous program. Again, sort of demonstrating our competency, if you will, at the enterprise end of the market. And then obviously in 2019, the Carlyle Group invested in Chronograph and became a client as well, which is something that we're, very, very excited by, Carlyle in addition to NASDAQ. So happy to provide more background, but that was sort of how we came to market, as you noted.
Perfect. So you mentioned already several times that you were initially serving LPs and then you expanded the model to GPs. Could you take typical use cases? So I have in mind Carlyle. Carlyle is one of your clients, and Montana Capital, maybe you can select others and explain to us what problem you're solving concretely for them.
Certainly. So at the highest level, it's really about realizing and enforcing your data rights as a general partner, right? if you look at the solutions that existed prior to Chronograph coming to market, they were largely template based, meaning that you would have in effect a middle office team that would distribute a template to an underlying portfolio company. They would fill that in and send it back, and then you could in effect consume that information and report out as needed. I'd be candid in saying that at Chronograph, we're pretty skeptical of templates on both the LP and GP sides. I think templates are very limiting in the degree of fidelity that they provide, right? Because they're predefined, it actually reduces flexibility to provide more information that you might otherwise receive in things like a quarterly report, et cetera. But they're also not the source material that often the investment teams themselves are looking to, meaning that, if you sit on a board as an investment professional, you're looking at board decks, audited financials, memos and emails and so forth. In short, unstructured information that actually provides the richest context. So what we've delivered at Chronograph is a tool set that can take advantage of all the type of information. So, taking in, again, any form of unstructured information. If you have templates, sure, great. We'll take those in as well. But then we can extend that further into qualitative information, meaning things, to your point, like ESG surveys, like regulatory and compliance surveys, et cetera. So in short, giving general partners, in this case, the ability to query their portfolio companies in any way they see fit and in any way they see appropriate for the nature of the relationship, meaning control or non-control. Take that information in, again, structure in a way that makes it now useful for things like your valuation, for things like your LP reports or other internal monitoring with other constituencies, et cetera. And having truly a single source of truth that you can look to understand at any given point in time, how does this company perform, both quantitatively and qualitatively? And, now having something that's validated, that's what you can, again, make use of that in any way you need far into the future.
Charlie, I would be keen on discovering with you the way you built your product. And yes, can you describe your team, your tech team? We heard and we felt from the beginning that you're a tech-savvy company. So would be great having more details about this.
Absolutely. We do everything in-house at Chronograph. We don't outsource anything. And this is something that we felt strongly about since really day one. It really helps that we have two technical founders and that, we can get in there and read the code alongside folks. And we even chose to base the company here in Brooklyn so we can attract, creative folks who want to do something a little bit different. We have to teach them what private equity is often because you don't find many devs who have a natural understanding of private capital markets. But that's something that we've developed as a competency, is really an ability to take extremely high performing, really A+ developers, teach them the business of private equity and deliver differentiated solutions. So yeah, we felt pretty strongly about being based in Brooklyn, just again, as a sort of different approach to approaching this problem. But even more so, again, as developers ourselves, we felt very strongly about keeping things in-house so that we can always be delivering incredibly high quality code and solutions to our clients at the end of the day.
Great. So you are serving and there you have a team in Europe, so you're serving different continents. How do you integrate and how far do you go in integrating local specificities? And when it comes particularly to, GDPR in Europe or regulatory conformity with regard to sustainable finance, how far do you go in those adaptations?
Well, there's a couple questions in there. So one, our client base broadly reflects the total distribution of private capital, which is to say about 65% of private capital as a whole is based in North America, 35% North America. And our client base is basically exactly that. We have clients across all regions globally, very big presence in Asia, which is great. Great presence in Europe and the UK. To your point, we have a team based in London as our second office. And yeah, we've actually been global really from the earliest days. And so in short, we've always had to consider, the global context in its totality, which is to say, to your point, different regulatory regimes with regard to technology, different types of users and user norms, et cetera. And so, call me a globalist, but we very much appreciate the fact that we, again, do have a highly distributed client base. And again, these are sort of, at the end of the day, actually routine considerations for us. One thing I would stress is that we deal exclusively with private information. So for us, issues of security, as you can imagine, confidentiality, and ultimately privacy have always been core to our brand. And I think there's simply no opportunity for deviation from that because, again, it is what we do, which is to say, administrate and help administrate private information.
Mm-hmm. Okay, and when you're thinking of the future and particularly technological innovations and within your company, which one or which ones would you say are the most impactful for your clients?
There's the in vogue two-letter word of AI, which everybody's talking about quite a bit. In fact, I just got back from a speaking tour in Europe discussing AI and its implications for portfolio monitoring and private equity broadly. So, just as a technologist, how can one not be excited by the opportunities that AI presents? But when it comes to AI, I think, what we're urging is a bit of candidly sobriety and caution with regard to what's achievable today. It's been incredible to see the rate of change of the solutions that have come to market. I think that's the thing that, we're monitoring most closely is how do these solutions and capabilities continue to evolve? Because if you simply linearly project, again, it's going to be striking to see where we're at in 2 or 3 years. But today, the reality is that, they can't generate alpha on their own. I really don't. I haven't seen anything personally that really I would view as being sufficient in actually providing differentiated insights around how a given asset or portfolio will perform. At the end of the day, right, underlying performance is a function of sort of human phenomena of repeating behavior and all these, again, qualitative factors that go into actually building a great business or finding a great investment. And so, I think where we see the most relevant applications of AI in this moment are around, creative uses, which candidly are a fewer in private equity, but more to the point, productivity uses. And so things like summarization of diligence information or summarization of, other long form content you may be getting, noting that, again, LPs receive thousands and thousands of PDFs and reports in any given quarter. And so that's where, we're spending our resources when it comes to integrating AI. And again, that is something that we're quite excited by. But to the point, I think we are, I just think realistic around what the capability of actually applicable capabilities are today. But beyond that, beyond AI, which again is certainly a very in vogue topic, I would just say that to return to some of my opening comments, we're still in the early innings for private equity, digitalization as a whole. And so for anybody listening out there who has a firm or is part of a firm, I would just say it really starts with getting, your data architecture and governance models in place to begin with. How are you going to administrate data? What tools are you using? Again, what is the governance model for that? Meaning who can update what and when, et cetera. And happily, there's very strong patterns that have formed, I think, in the industry, as previously mentioned. And so, there's a lot of consultants out there, certainly, who can give you great advice on that point. Once you have that architecture in place, you really need to integrate it into your process, right? Ensuring that you're moving beyond, again, sort of manual aggregation in Excel to take advantage of these great new capabilities that a number of folks can offer now. And, once you've done that, then you begin to build the foundation of a data set that then can be used for, different applications, whether analytics or AI-driven use cases, et cetera. But until you have that infrastructure in place and you have that integrated into your process, I would say don't try to leapfrog, because you're going to be leapfrogging off the cliff with no true support in place. So we'll pause there, but I think that's how we view the world today.
Great. So what are your next steps?
Continued growth. I mean, candidly, we have almost artificially high win rate, to be direct. So, for us, I think it's about just continuing to make sure that folks are aware of Chronograph. Quick aside, we actually didn't market for the first 7 years of our existence. In fact, our cumulative spend on marketing for the first 7 years was about $8,000. So we really grew strictly through word of mouth, which I hope speaks to the strength of our product set as a whole. Certainly that's changing today as the numbers get bigger. We had Summit Partners come in as an investor at the end of 2022. And so we got to make them, a risk-adjusted return. And as a result, we need to ensure that we're continuing to grow at the rate we've previously grown at. So all that to say, things like this certainly are events across the world. Really, we're doing a number of events to get the word out, just engaging with our audience on LinkedIn in particular through high-quality content. All these things are meant to really introduce us in many cases to folks who may have not heard about us previously. But we have a heck of a track record. We have a phenomenal retention stat. 126% in effect. So all this to say, we feel very good about our value add and would welcome conversations with anybody who's thinking about how they can, again, take advantage of this new world of information and data that we find ourselves in.
Perfect. Thank you very much. Inspiring. I always close my discussion with my guests on a recommendation of a book or a podcast. So, Charlie, what is your recommendation?
So I read a lot of books. I tend to have a bit of a split personality between, historical nonfiction and science fiction. I'll probably keep it to the former for today. I think, we're seeing a lot of change in the world, and, geopolitics actually is the area of personal interest to me and has always been. I think for folks who haven't read it, I would highly recommend The Fourth Turning, which looks at sort of generational change. And it's a very compelling argument. It's a bit of a repetitive read because they go into some exhaustive examples to underline their point. But I would just say, of all political science books I've read, and, that's what I majored in university. And again, that's what I read almost exclusively. It is a very compelling explanation for some of the turbulence that we're experiencing at this time. So if you're looking for an explanatory framework, it's a very compelling read, I find personally. And again, it gives me some assurance and optimism, at least, that, we are in a period of transition, and ultimately a new stability will be found. Certainly that's what I think the world needs ultimately, but we'll leave it at that.
Thank you very much, Charlie. Very inspiring, and congrats for everything you did with Chronograph. See you.
Thank you so much.
Thank you all for listening and sharing this moment with us. Don't hesitate to contact me on Twitter or LinkedIn to share your comments and reactions. You can also rate this episode on your favorite podcast platform. See you soon.